All right. Can you hear me clearly and see my screen? Got to ask every time. Got to make sure. All right. Nice to see you guys. See some uses and some new people. Nice to have you. Hey, Kevin, Rose, how are you? Carmine, what's up? Mohammed, always. All right. Let's do this. Welcome to DMR session Wednesday, November 9th, 2022. We are coming down to the wire here. Another week and a half, I guess, until Thanksgiving, and then Christmas over. So here we are. We are sitting on the fourth quarter. We are in the second third of the quarter, right? The quarter's 90 days. We're in the second month of the quarter. It is now November. You have 38 days behind you, and you have 52 days to New Year's Eve. Out of these 52 days, right, what's workable? What's left? That's what you got to figure out for yourself and where you stand. All right, this is done. We're sitting here November 9th. This is done. We got this week's probably a bust, most of it for most of you. If you're hosting, this whole week's probably a bust, right? If you're not hosting, maybe the half of the week's a bust. Everybody's different. See how where you're at. Okay, and then it's probably going to be a wrap right here. So we're sitting here tonight. This week for sure is going to be a recording for me, and I'll be in here, here, and here, 3, and then 4. So 4 or 5 sessions left. So 4 sessions in a recording because I'll be here. So 1, 2, 3, 4, and a recording. I think that's where we're sitting. And that's it, man. We'll take a break and we'll regroup for the first of the year. Just like that, another one in the books. All right. That's what I just said. We're looking at recorded for the November 16th, live on the 23rd. And then I'll finish out the cycle. All right, 12-week year. Okay, so you have to be working on 2 different angles right now. You have to be working on immediate stuff and projecting for next year what you're going to do. You know, everybody, this is the 12-week yearbook. Everyone talks about this urgency all of a sudden end of the year. I'm getting all kinds of emails and chart markups. And man, I've seen this. This is, I think, finishing my 11th year teaching or 12th year teaching. I actually have to look. It's however old my son is when I started. My son was born and I started changing the way I felt about things. And that's what led me to this journey. So what are we going to do, man? Where are you at? Ask yourself the tough questions. I know there's urgency in your blood right now, but you have to figure out a way using a 12-week guide or some way to cycle yourself to feel urgency year round, to feel like motivated and excited, like you do right now, like, or whatever it is, fear of missing out or fear of another year getting away from you and the calendar turning over. There's some emotion that drives that, and I'm not immune to it. I feel that too. But how can we get you in a position to where you feel like that the first of the year, every quarter? What usually happens is, it's typical, man, and I measure this by the gym. Right now, the gym is getting crowded. People are signing up for the first of the year, getting an early start on their goals for next year. And then January, you can't get a machine, man. You want to go in there and get I don't know, get an elliptical or get a stair mill. Good luck. You know, that's what happens. And by February 1st, everyone tapped out on their goals. I don't want you to be one of those people. I want you to be better than those people. And you have to figure out how to get there. We use the 12-week year. If you're new, brand new, I think there's a couple. Let me look. Yeah, a handful of you new guys here tonight. Welcome, by the way. You need this book, and you need to start mapping out your shit. All right. I'm not going to spend a lot of time talking about this because I'll spend first of the year helping everybody get mapped out and get going in a new direction. But I want to pick up right where we left off last week. We were talking about trade mapping and asking yourself what you're supposed to be doing. And we were talking about developing a directional bias. And I gave you a pop quiz about it, right? How do you know which way to go? Some of you wrote some good answers. And we went over the typical stuff. But what I didn't get to last week was almost like a self-questionnaire. I'm going to give you this stuff tonight. We'll talk about it. And you have to figure out a way to make this part of your self-talk, like talk at the charts or whatever you do. You should have some type of routine that you go in and that makes things clear for you. All right. So the pop quiz was, how do you know which way to go? We're looking for anchors. We're looking for the basic stuff that we've been talking about, the technical elements on the chart, right? Trade away from the confirmed flips, refine the entry, or just get in, whatever your trigger is. But the elements, right? We know the lead in, the setup, and the trigger. Those are the elements that you're supposed to be looking for, and you're supposed to clearly understand. That comes from flashcarding and doing some back stuff. But what is the self questions you should be asking yourself? And that's all related to directional bias from background, right? So if you're looking at intraday, you're looking at the 1 hour. I look at the 1 hour because I don't look at the daily. I look at the 1 hour and sometimes the 4 hour, but most of my information, my directional bias is derived from the 1 hour chart. Why? Because I'm looking to grab something a couple hours in and out. That's it. A few hours in the office, grab something, grab a float for the day, 30 to 50 pips, 1 or 2 trades. That's all I'm looking to do. And if you are qualified with a larger account, this should be how you conduct yourself. You don't need to overtrade a larger account. You need to trade higher lot sizes and be more accurate and follow the spreadsheet. That's all you can do. And I don't know, a couple people have written in and told me that you can only scale so much in those accounts before you break the rules. So keep that in mind. Whatever dealer you're using or prop firm you're using, make sure you know the rules. But if you can follow the spreadsheet for 5 cycles, then take the 5 cycles and reset back to 1, or stay on cycle 5 until you close the month out, if that's your lot size that's allowed. If anybody has any clarification on that, want to send me an email or let me know. This way I'm not talking out of turn. I know what's going on. I don't know the rules. So you walk up to a chart, show up at your office, 1 o'clock, 1:30, 2 o'clock, depends on part of the world, 5 a.m., whatever, wherever you live. What are you asking yourself? What's going on in the background? What does the 1 hour look like? What does the 4 hour look like? Sometimes too much information is just too much information. You can look at the 1 hour chart and see a couple of days of rise, larger oversized candles, pin bars, railroad tracks, hammers. Those things are telling on a 1 hour chart, right? How many days have been going up? How many days have been going down? Where am I sitting in relation to the blue tracers? Remember last week I talked about the blue tracers, how if you notice like it was coming like this and it just barely made a dent and went lower, right? That shows that the dealer was trading off yesterday's high and it was drawing a lower level. Okay, so this was telling that yesterday's high was not breached and that currently he was trading slightly below that high. Then you look at how many days was it for him to get there? Has it been 3 days, 2.5 days, 4 days? What do the averages look like? That's huge, man. When you get averages going vertical like that, straight up or overly expanded, you guys know what that stuff looks like, but it's important stuff. When you get the, right, I think Bill Williams called it like a gator, and he drew like the thing was like this. When the averages are like that, I think this is supposed to be the mouth and starts coming back, right? He calls that a gator. My wife can relate because she's actually a Florida Gator, so I actually like that one. But you know what I mean? It's, what do the averages look like in relation to each other? Are they, right, that POMA, perfect order of moving averages, all fanned out? Or are they spaghetti-like? Are they flat? Are they crossed? Those are things you're supposed to be asking yourself, and not ask yourself on a 5-minute chart. It's bullshit on a 5-minute chart. You need to ask yourself on a 1 hour chart, 4 hour chart. What do the averages look like? Okay, are they straight up like this? And then you got a print coming in like that? Vertical or flat? What do the candles look like? What are the candles doing right now? Do you have some big outside bars? Do you have a vector candle, right? Remember vertical markets towards the end of the run, the markets go vertical towards the end of the run. It's a dealer trap. It's a painful margin call experience. If you're short down here and then they start building and going higher and the market goes vertical, these candles, depending on the chart, right, could be anywhere from 30 to 50 pips per candle, especially the way the market's been moving lately. And man, they're punishing these lower level shorts in this example. Right? I have some charts, pictures. The market's like a joke. It's like exactly what it did last week. Went up, fell back down, went up, fell back down. So what's the print? Right? Take a picture of this, man, and see where you fit into this. Background, 1 or 4 hour, what's it doing? How many days rise or fall? Okay, 2 days, 3 days, right? 3 levels over 4 days, that's a thing. 3 levels over 5 days, unlikely, but you might get some news consolidation a couple days and then it pops. What do the averages look like? Open, wide open, flat, vertical. What's the print? What's the print? Not the averages. What does the print look like? What are the candles doing? Vector candles, small inside bars, big outside bar, right? You got a big outside bar at the low, and then you got bars trading slightly off of that. Outside structure, right? Builds this whole thing as a W with consolidation in between. Right? Price would, in this example, price would come down into a big outside bar, probably get a rejection off the low, and then the bars would usually stay above the trap zone, right? This would be the trap zone off the wicks, and the bars would print in here. Then you're looking for it coming out of there. Right? Okay, so let's just say, for example, you're thinking long. Now you got to ask yourself the question, where would I have bias confirmation? Where would I be proven right and where would I be proven wrong? Where would I get involved? Which means, where do you execute? Okay, these are the things you're supposed to be asking yourself. If you just walk up to some shit and go, that looks like an M, and take it, that's probably 90% of the reason why you're failing. You don't take every M, you don't take every W. You got to have a 1 hour directional. Okay, and the example up. So what would you be looking for? Sideways print into a big vector deep dive bar, right? Comes down, hits the level, rejects, and then bars trade inside. Where would you be right? Okay, you would be right on a close above the apex nadir, right? On the downside, it would be this. You would be right here. Where would you be wrong? If price came back below the previous level swing, closed, you have to figure out where. So here's the thing about the levels. And this is what keeps you, it's a crazy thing, and they do it, and I don't really know why. I mean, I know everything's for orders and money, but I mean, it happens every single time. And it's, you have your levels drawn in, right? Price comes in, gives you a rattle. So now, let's just say you go long. You're long, price goes up a little bit and then cuts the low and comes back above. Well, in your mind, you go, oh, it's coming back above, I'm good. No, you're not good. What happens is when they take a level, you get that suck back, right? It always comes back. This is your opportunity to get out of the trade without a massive loss, depending on where you pulled. Could be +5, -5, +2. When they take out the level decisively, when they close the bar body below, you're going to get a pullback and then a continuation into lower levels. This alone is not enough to stand on, but some other things that maybe you're missing, some nuances, that the direction will be sell side instead of long like you initially thought, right? Maybe the average is turned over. Maybe there's a V you missed. Maybe the blue tracer is sitting somewhere and they closed below the tracer and retested it. You got to look at some of these things and be honest with yourself and open that, okay, I went long here, but man, they closed below. I'm still around. My stop happened to be right there. I'm still around. And now it's heading towards my stop. Man, if you could save, if you're trading size and you could save 10, 20 pips, a couple $1,000. But the thing is, if you don't train yourself from the beginning, whether you're trading micros, minis, massives, it doesn't matter. If you train yourself correctly from the beginning, you're going to save yourself a lot of grief when you get to where you need to be. I know it's like easy to say, but it comes from training. Everything is training. You train yourself to pretty much do anything, right? You just have to make the right decisions and stick to it. Always the fear of missing out that, oh, if I leave it alone, it'll come back. Man, if you see a close below here decisively, right? Full body red and it closes, very little wick, and that's a decisive close. You can imagine in your mind that if there's a little wick, the POC was probably at the bottom of that candle and they ate all this crap up. So they're going to give you one more chance. Sometimes they don't give you any chance. Sometimes the next candle opens and it's too late and you're out. But sometimes they give you that little pullback, suck back into the area, and it gives you an opportunity to scratch -5, +5, +1, and you don't take it. Then you're like, damn it, I should have took it. How many times are you going to tell yourself, damn it, you should have took it, before you just actually learn to take it? There's always going to be another trade, right? And we talk about hope and praying is not a strategy. Oh, I hope this comes back above and stays above. Well, no, they just showed you their intent. Their intent was to clear the level and make easy pickings, run the stops, and then drop down. That's what you have to figure out for you, where this works. And I've said this before, but I want to make sure you're monitoring the 15-minute and executing on the 1 or 5. There's a huge difference in that, and I have a lesson plan for that coming up. So probably next week, I guess it'll be a recording, or it'll be the week after. But you have to understand, you're monitoring on the 15-minute, always. That's always been the base. People have been sending me 5-minute charts and stuff, and then I realized that they send me a picture of their setup, and they got nothing but 5-minute charts up. That's incorrect. If you're doing that, cut that shit out. While there's still time, there's still a year left. Monitor the 15 and make entry on the 5 or 1 minute, whatever you like. The idea is to get the larger size directional patterns, right? Because the 15 is pretty telling when you get these clean patterns, and then you scale in down to a 1 minute or a 5 minute and you make your entries here, right? You want to almost like zooming in with the microscope or whatever to see binoculars, to see what's going on right there where you can get that little micro flip. This should be hidden in here and in here. That's what you're looking for. And if you're having success on the 15 and it's working out for you, don't change anything. All right, so that's what you're supposed to be doing. You're supposed to be forming some type of directional bias, and you ask yourself these questions. Okay, where would I have bias confirmation? Where does this confirm that I'm correct? It's going to be above the previous zones, right? It's going to be above that zone and above the swing zone, below the swing zone. Then you got to ask yourself what's available. Okay, that should come from your knowledge of handling GBP or Euro, right? Depends on what you're trading. That should come from a foundation of knowledge. Okay, if you have a 30 pip impulse leg and you get in at 0, then 30 pips are available to you. You got to go for 30. If you get in on the very first iteration and you want to take 2 impulses, that's 60. But you got to sit through some pullback and you got to make sure timings are correct. When I say timings, if you get in at the end of the blue box and you get a nice formation, you're going to get this, and then you're going to get this around the 5 to 6 a.m. hour, New York time, right? People call it the doldrums, sideways print, whatever, lunchtime. That's basically London going to lunch. And then you're going to hit the stops and continue, or you're going to get straight continue. If you want to sit through that shit, that's okay. Get your stops to break even and leave it be. You have to decide these things and what is the correct confirmation for you. It's different for everybody, but we're all looking at the same shit, so it should be roughly the same type of confirmation. Maybe you'll use a certain type of candle pattern, or you use some kind of close above or below the ketchup. That's all perfect. So it's going to vary from person to person slightly, but it should basically, right, it should be the same theme. We should all be looking at the same theme. It's basically what these guys are doing from behind the screen. Okay, and then I asked you to demonstrate last week. I asked you to demonstrate a zone flip, book flip. Everybody was fine. Anybody have any questions about that? Right? I gave you a little pop quiz. It's basically, right, drawing the stuff that I've been talking about. You box everything up. I want you to try boxing everything up. If you're struggling, I want you to start boxing everything up. And Muhammad, no offense, I'm talking about you, right to you, brother. I want you to start boxing everything up. Send that shit to me. All right? Nothing but love. I'm not picking on you. This is the next thing you need to do. All right? So how do you know when you get exactly what I said? This or this. That's your confirmation. That's your bias. Where's the trade go right? The trade goes right here when it closes above, takes out the level. The only way this is going to be a failure is if there's two blue tracers laying right there, and that was the high yesterday, and it can't get above. Then you're looking for the reversal back through. So if you get your reversal at the top, then what's the next move? The next move is to come back below to sweep through the book level. And if you don't get in opportunity here, then it's going to be at the bottom of Asia as a retest into the level. There's always more pips to be had. If you feel like, oh man, it's exhausted, then wait for the pullback and go again. And when I say exhausted, you're going to think like, oh, that's a 35, 40 pip impulse leg. Okay, so then what level are you in? Level 1, then you should get a decent 33, right? 33% pullback, 38, whatever the official number is. If it's level 2, you're going to get a 50% pullback of that level. So look, I mean, you could eyeball that shit. You could look, it looks like this, right? Goes down, it comes back low. Then it goes down hard and comes almost all the way back, right? So a lot of times you'll get a 50% retracement of the entire first and second leg, but it makes an even double top here, which is a second opportunity to enter. This is the kind of shit that you need to know before you're even trading. This comes from doing homework and looking at it. So if you get in here, you're going to sit through some type of retracement. That means you're chasing shit, right? The entry is here and the entry is here, right? We talked about last week, impulse 1 equals impulse 2. Okay, so if this is 35 pips, then you could expect this to be 35 pips. So if you get in -7, 35 -7, that's where you're at, plus the spread. Depends on the dealer. So that's what's available to you until you hit the low. Of course, it's more or less. There's always more or less to be had. They always vary the levels, but you got to have a rough idea of what you're getting. What's available to you in that leg? If you map out more diligently ahead of the trade before actually just showing up and pulling the trigger, you're going to have more success. But the problem is everybody just wants to trade. Throwing money at me and trading is not how this works. I wish it worked like that. I'd be happy for you guys. Just write me a check and money will start falling into your account. Man, that's some shit. I'm in. Doesn't work like that. Showing up here is not enough. You got to do something. Some of you have been around a long time listening to me and excited, and that's great, and I really appreciate you guys. But at the same time, I'm still waiting for that first piece of homework from you. And I don't know, it's like if you think I'm going to be too hard on you, but I'm just some dude, man, that's hanging out. Just send me something. I got some homework from a guy that's been in since 2019, 2020, and he finally sent something. And he's like, I know it's been a while, I should send you some homework. And you know what I found out? That I think I got to do a class on how to do homework. I don't want to say his name and embarrass him, but that was some jacked up stuff he sent me. Just basically a picture of a chart. I was like, what am I going to do with this? I know what that shit looks like. I got 1,000 of them hanging on my wall. I got a book full of them. So that's the stuff that I want to try to, like, I guess, get back to some of the basics and the basic stuff you're supposed to be doing, right? So, yeah, I think I'm going to do some kind of class and then I'll post it into the path to success because I think understanding how you're supposed to mark charts up is part of it. So that's coming. But here's the thing, man, is you need to know the 3 elements of a trade. A lot of people say, what the hell's an element? And that's like the lead in, setup, and trigger. You need to know what those pieces look like. Some people don't even know the difference between a flashcard and a chart markup. And that's something I discussed a couple of weeks ago. I feel like I probably need to address that. So I'm working on this. You guys teach me something every day. And the way I feel is that I'm failing you as a teacher. If you send me some shit and that was the markup, then I must not have conveyed it correctly to him what he's supposed to do. So I will fix that. And if I find an error in my ways, you know I'm on it. The goal is to get everybody going in the right direction as quickly as possible. There's a million times more opportunity available to you than there was to me 20 plus years ago. I hate to say that out loud, it makes me feel old. But there's opportunity now that was never available. Man, there's these prop firm companies are popping up left and right. I don't know if they're all paying out, but you stick to what the group's doing because there's guys verified checks sent to me that they're getting paid. So if guys are getting paid, that's where you go first. You don't try some bullshit on your own. If there's 10 guys in the group getting paid regularly, that's where you go. You follow their lead that they're getting checks. All right, so that's how we're going to move forward. I'm going to set up a class about how exactly you're supposed to be marking up charts, what you're supposed to do. Some of you that have been around a long time, remember I used to black out the margin, you write all the elements on the side, and you show, and you make enough of those to give you a couple variations on the theme, maybe 10 longs, 10 shorts. There's really not that many things they could do different. I mean, I found some, digging through some files, I found some old stuff from 15 years ago, same friggin' pattern. 20 years ago, Jim found one from the I gotta say this every time, from the 1800s. That shit blew me away. So what does that mean? Human behavior is unchanged for decades, centuries. They're still doing the same shit in the markets that they've been doing from the beginning of time. The issue is, can you sort out your shit and figure out what you're supposed to be looking at the right way? Right, we talked about this. I already mentioned it. Impulse, directional bias. Right, you should know this stuff about each pair you're trading. The retracement areas, what the zones do. Talked about always be leaning on something, turning the blue tracers into zones. Okay, I got a little bit of homework from this, not much. I was surprised. I thought for sure people would send me some markups. Lean on something. Lean on the day open and the AR lines. Lean on a blue tracer, the open, and something. When that blue box opens right by a tracer and the blue line, the navy blue line is there for opening price, man, that's a clue. I've been looking for somewhere to take a trade, Steve. Well, did you notice the opening price and the AR line and the blue tracers all right there? That's a good place to start, my friend. Right? Just call them leaners, something to lean on. Lean on something, right? How about if a sweeping set of moving averages crosses through the blue tracers and a pin bar from yesterday, rejection, and you have a wide zone off of that pin? Those are areas that you could be leaning on. This is stuff that you have to start putting together in your mind, right? And then, not sure if I got to this last time, but I want you to draw a box already. Go through the charts and start boxing off every swing high, swing low. Start to be diligent in what the price boxes would be and how they look. And I'm going to quiz you on some of that stuff tonight. Right? Box in the London Open, the US Open, box in the blue tracers. Start boxing that shit up. Extend the AR lines forward into London. This should be automatic unless you disable it. If you disable that shit, turn that shit back on. You should extend some lines off of the London box, shadow box. If that's the high of the day, they're going to come below it and retest into the bottom of the box. So if you have a line there, right, basically like instead of an AR line, it would be an LO line. The London Open, the London Shadow, an LS line. All right, you guys know what I'm talking about, right? The little shadow box from 3 to 4 a.m. Eastern time, right? You can box that out like this, and you can AR it. So when price comes out of the other box, the blue box, and goes in here like this and does something like that, that's a clue. That's a trade. This is a trade right here, actually. Inside this box, and you send the lines out into the future. And a lot of times you'll get a 12 or a 23, right? Or a 22. You'll get a one hit single and then come back and double top it here. That's a 12 trade, right? You might get a double top here, a 21. A lot of variations of what they could do. What'll happen is the session will go off at 4 o'clock and they'll drive price down, opening drive, opening range, right? And then they'll come back into that level and retest, hit the stops, right? Because a lot of people get that push, move the stops to break even, they'll come back and pin above it and go back below. It's just when you start thinking about it from their perspective, it should change the game for you quite a bit. So extend your lines, draw some lines off of these. If you're trading US session, draw lines off both boxes when you come to the terminal. Just send them out. See where price is in relation to it. All right, there's a reason. Opening drive, opening drive. They call, I think in the US session, they call it ORT, opening range trade. Open range trade or whatever. Okay, I was going to draw some shit for you. I can't remember what. All right, so here's a trade I'm going to show you. Somebody sent it in. It was pretty great. Give me all the elements. I'll give you like a minute or two because there's a lot of stuff I want to cover tonight. All right, so pop quiz. I'll be quiet for as long as I can take it, which is about a minute. Ask my wife. Drive her crazy. Anyway, all right, you ready? Go. All right, you got it? Tell me what you got. Pop it up there. Okay, so we're looking for this stuff, right? What's the lead in, setup, trigger? Tell me. Tell me what was the lead in. Tell me what was the setup. Tell me what the trigger is. If you don't know what that is, let's start walking through it together. This is sent to me from a student for EJ. Okay, this is, by the way, this is a 1 minute chart. He should have made entry on this, but been monitoring on the 15. All right, so what do you got? He's got his 3 pushes, right? Leading in. What's going on leading in? He's got 3 pushes into the high. Yes. Okay, what else? Tell me some shit. You got a second leg. You got some pin bars. Yeah, that's a nice rejection right there. Okay, this is London. This is going into US, right? So what does that mean to anybody? Well, you had a full run. So what's the next move possible? Anchor reversal. Yes, New York reversal. Okay, good. What else? Okay, you guys are on it tonight. Yeah, looking at tea time possibly. Okay, so box it in, box it in. What happens? They go above, tap it, and they pull all the way back and cross through the levels. Okay, so here's your nadir, right? There's your nadir. Take the pins, aggregate out as a box. You get a tap below here, which confirms by taking out this level after the anchor stop hunt high, after the run up, after all the lead ins. He's got some speed through the 50. That's okay. He has a deep V pullback, refined the entry off the pins and drew the box like he did. Second leg sell off, right? They come all the way back. They close below here. Their intent is to offer lower prices, and this failure swing to get above this swing confirms you're still good. There's another V pattern right into the moving averages, and then the bottom falls out, and he took the trigger at the blueberry. That's okay, man. It's a good trade. Okay, so lead in, extended run overnight, session changeover, pins to the high, M formation, sweep through, below the book, offer the V pattern, refine the entry. The trigger is the second leg on the zone, the rejection zone that we're projecting into a sell. Where's the trade go right? The trade stays confirmed right when they close below here and they push below here. Trade's still good, man. Where's the trade go wrong? They get above this box. And if you're still hot, get out. Because then the next move is to offer higher prices, continuation for the US session. All right, they can make a pullback and offer higher prices. Maybe you can get your float out of here. But if it's not developing like that, kill it. You have to not be afraid to get in and out. There's always going to be another setup. You just have to not be afraid to wait for it. You have to have the patience, and that stuff comes with time and developing. And it's like I told you, courage is backwards, man. When you can do it, you can prove that you can do it, and then you have the courage to do it. It's like jumping out of a window. I was scared to death to do it on a half-inch lifeline and a harness. Scared to death, man, for real. But once you do it, you go, "That wasn't so bad. I could do it again. Do it again. That wasn't so bad." Okay, same thing. If you're afraid to start doing stuff, start pulling the trigger and getting some reps. Right? You don't build muscle going to the gym one time. You build muscle going to the gym 100,000 times or 1,000 times, 300 times a year. That's how you build muscle. You don't take one trade and go, "Okay, I got it." That's what everybody does, though. They come in here, they throw some money at me, and they take one trade and they go, "Steve, check this out." I'm like, "Yeah, I'm checking this shit out." And then next week, I never hear from them again. What happened? They took one or two good trades and they had a run and they vanished because they're embarrassed of what happened. Okay, so this is a good question. Mr. Steve. You don't have to call me Mr. Steve, man. About the stop hunt. It closed above the first leg. Isn't it confirmed for more long? Yes, on the book level, but you have to have your anchor somewhere. And when they sweep across, right, the way to confirm that it's no good is when they sweep across. Right, so this closed above, but it rejected and came right back in. And then this, if you notice, it goes 1, 2, 3. It sweeps across to the average and then takes out these levels. This becomes the new levels. I'm going to show you some book map stuff. I'm talking too much, running out of time. Initially, these are the levels, right? Then when they go higher and squeeze here, this becomes the level. It's constantly changing in the book, right? You have the spacing that you want. You have these V's to the high. You want these spacings. When they spike it and come back below quickly, that's a sign that you're exhausted because you have all these other elements. That's why just this alone is not enough. The elements have to be there. You went from box to box, full ADR run. Okay, that's a sign. This average is starting to turn flat when this sweeps through. There's your crossover, right? You could even wait for that for confirmation if you want. This is a 1M chart, by the way. This shit's going to cross over pretty quick. Right? If you're not sure, you can wait till it gets below all this. It gets below this swing and this swing. Then offers you a V and comes back and rejects, fails to take out the levels. All right. So lead and setup trigger, what was it? You guys covered it pretty good. All right. So I'm gonna go a little faster. So there's a flip on the chart I'm about to show you. There's two really good flips on there, and your entry. Show me where. Show me where they should be. Go. Like 30 seconds. Just figure it out. Okay, so this is the same exact example, right? Here's your W. They closed below, pinned it, and came through. So the confirmation of higher price, even though this closed below, is when they sweep across the book, right? So they sweep the book and they come above the tracer. They tap it and they continue, and then they flip it again. You can refine the entry on here. If you're using limits, you may or may not have gotten this. Okay, what's the best two? The earliest ones in the cycle are always the best. This is the best one here, and this is the best one here. There's a flip in here, kinda. All right, so same exact thing. You have all, what are the elements, right? Moving averages are in your favor. There's POMA, perfect order, except for this, higher time frame. For you got ketchup, water, and mayonnaise all lined up perfectly. This would have been a good target if you got in here, right? When this prints this smaller W, okay, check this out. In order to get this level here to press, they got to squeeze the book. So this actually becomes an entry. So you would have, when price squeezes down like that, this is what you're looking at now. So where are you going to get in? Okay, I'm going to draw this apex over here. I'm going to extend this pin out. This is where price was trying to go up, and the seller said, nope, we got this book. They pushed it down, and then the buyer said, no, we got this book. Now you're in between no man's land. Who has the book? I don't know, Steve. Who has the book? It's like, dare you to move. The next guy that makes the move has the book. This guy breaks above here and hooks it. He's got the book. Why? Okay, look at all the elements. Blue tracer, averages, consolidation coming out of Asia, a quick move to the low, a hook back to take out the previous swing low, but close back above quickly. Sweep across the book, retest, gone. Retest, gone. Vertical market, this shit's coming to an end. This pattern, this chart's older, by the way. I don't remember when, but they threw this pattern at us last week and this week. And if I have enough time, I'll get to it. If not, I'll get to it next session. Okay, what can you do with this in the US? This is tough. There's not a lot of action here. Not a lot of stuff to lean on. But in your mind, right, you take this rejection here, you stretch it out into time. You look at this pin down here, right? They turned it here, they pressed it. Okay, you stretch this out. You don't get a retest in there. So this is why you draw on the higher time frames and drop down to a lower time frame for entry. Maybe in here, in these little bars, you got something that was leanable that you can lean on. Right? That's a wedge. How does the wedge work? Usually the flat side is the breakout side, and the bring it in side is the stop side. Right? I wouldn't have liked this. It's very late in the day, and the averages are in the way. It hits it. You could have got this retest into the average for something. I'd go to bed already. Chasing shit now. All right, this is a harder chart, but it's the same. The thing is, the same elements. You got to go through and plug them in. Learn how to plug it in. All right, this is a typical news type of trade. What I want you to do with these, okay, see this candle? Cut it down to like a third of the size. Get rid of this, get rid of this, get rid of this, right? Take this piece, move it over to here. Now you got something. Steve, what the hell are you talking about? You're nuts. Maybe. I was going to say they used to think the world was flat, but some people still do. And I don't want to I'm not looking for debate. Just saying. Okay, so you take this consolidation and you move it down over here. The news comes out. You basically have the same thing as a regular Asian setup, right? Break below, hook back, hook back. There's the zone, sell it, hook back, sell it, hook back, push one, push two. What do I expect? At least a 50% pullback. There it is, right? Draw a zone out this way, sell it, boom. Okay, some people said they lost sound. Are we good? Okay. They're saying it's them. We're cool. All right, so look, just ignore this bar, but this bar gives you a directional bias. Look at that. There's some massive spreading right there. You're coming into the end, right? And sure enough, starts to turn sideways. Then what do you got going the other way? Right? If you had grabbed a little of that, look, shoulder, head, shoulder. Right? Euro, GBP, they love those patterns. These Euro crosses love the head and shoulders. Think about what it is. It's the reversal showing back up. Then they go, okay, we got these suckers, I mean traders, and then go back and hit them again. Then they trap lower level shorts, they hit the stops over here, then they come back, consolidate, shift it up, right? And when they shift above here, this is the new press area, the book pressed here. When they come back above the press, they roll it back in, flat print, trigger, gone, right? And that's a good target. Two or three bars to profit. Easy stuff. All right, this is the kind of stuff you got to be looking at. Okay, so here's what happened, man. I mentioned this a couple weeks ago, 3 weeks now. I mentioned about aggregate entry. And a couple of students actually listened to me, and I was actually pleased. So they sent me in some of their aggregate stuff, and guess what? It's working for them. They started having some success. So what I want you to do, if you never thought about this, you don't even know where to start, build one for me. Build a grid entry on a chart and send it to me. I would say normally I would just say we'll do it together. And if I don't get enough response from you guys and girls, I'll do it next week. I'll build it for you. I'll show you how to do it. But I want to give you some ideas about it. So this was really exciting. Listen, I made a ton of money aggregating. But what happens is, as you get better, because it takes a lot of the fear away, you're buying or selling the stop loss level. So if you're using a 15 pip stop, you get in 15 pips later, above or below. And then you put a 10 pip stop below the structure. Right? I was going to ask you to build one for me now, but we're tight on time. But what's so great about it? Well, it's an immediate fix to fear of loss. Because you're buying or selling the stop level, you don't have to be 100% right all the time. You just have to be somewhat right. So if they shift the zone a little bit on you and trigger it, you're still in, right? It keeps you from over trading, and it helps you battle the psychology of getting stopped out and the fear of losing and all the things that are associated with that part of the business. It fixes that. And it works because we know they trigger the stops, and you don't always see it. You can't always pinpoint your entry. But the idea is to start somewhere, and this is a great place to start. All right, I only have a couple minutes left. I want to get done with you guys always around 45, 50. I'm sitting at 47. So I'm probably going to wrap it up here, but I'll pick up with this. I had a whole bunch of book mapping stuff too to go over, and I had to box stuff in. So that'll probably be, I'll just roll it right into my recording, man. So here's what I'm going to tell you right now what I'm going to do. I'm going to end it here. I'm going to roll into the book map stuff, right? And I'm going to talk about aggregate entry. And the next thing, talk about how to build that grid, how you're supposed to handle the stops and the levels. They figured out on their own how they wanted to do it, and it's working for them. I used to have an EA that did it, and the spacing was a little big. And Joe wrote that. You guys remember Joe passed away? He was the programmer for me. And it was a pretty decent little EA, but it kept getting code bugs, and they were blocking it. It wasn't working. Then it would work. They would update the platform and stop working. It became a nuisance, to be honest with you. And it's just easier to pull the trigger and put a pending order above or below, and then your stops and your limit. And I'm going to show you how to aggregate that properly, what works for you. The thing is, it's pair dependent. If they hit the stops in 20 pip increments or 50 pip increments, you have to accommodate that. So next session, I'll talk about how to aggregate entry, and we'll talk about more of this stuff going forward, and we'll do some book mapping stuff. And I'll do that, and I'll post it. I got some personal things going on. I'm going to be off next week, and mostly because I got to flip my sleep. So it's difficult when you got to do. I got to flip my sleep around, be normal for a couple days. It's a pain in the ass. But anyway, I hate being normal. You guys know that about me. All right, so I'm going to wrap it up here. This is what I got. If you have any questions, email me. Send me some emails about your homework. Try to make some changes on some of the stuff we're doing. Send me some flashcards. All right, briefly, do you know the difference between a flashcard and a chart markup? Yes, no, throw some Y's up there. Okay, I know most of you do. A lot of yeses, not one no. No. Anyone? All right, if you know the difference, then send me one of each, two of each, 2 longs, 2 shorts. All right, I'm going to end it here. I'll see you guys next week. Thanks for coming. Appreciate you. I'll see you guys before Thanksgiving for sure. When I say see, I'll be in here. We'll talk. All right, have a great night. Thanks for coming.